shares of Sterling and Wilson Solar, a solar engineering procurement construction company, have declined again on Tuesday by about 10%. This means so far the stock has declined by over 60% from its issue price of $780 per share. This is striking because the shares of this company were listed just 3 months ago on the stock exchanges. Hello, my name is Pallavi, and on today's Mark to Market show, we will find out why Sterling and Wilson shares have fallen so dramatically. Mark to Market is Mint's analysis column where we look at market moving news and trends. Coming back to Sterling, problem started last week when the company's promoters, Shapoorji Pallonji Company Private Limited and Khurshid Daruwala, sought an extension for repayment of loans due to Sterling and Wilson. Now, why is this a problem? When the promoters decided to raise 4,500 crore, one of the stated objectives was that they will use a part of the proceeds from the money to pay off loans due to Sterling and Wilson. At the end of March, loans given by Sterling and Wilson to other promoter entities stood at 1,935 crore. Of course, this was a problem at the time of the IPO, given the troubles firms such as those of SL Group have had with over-leveraged promoters. Remember, earlier this year, when shares of Britannia Industries Limited also came under pressure when investors found out that intercorporate deposits to other group companies such as Bombay Dyeing and Go Air had increased. In Sterling and Wilson's case, an assurance from the promoters that they will pay back the loans within 90 days from the date of listing had helped the issue sail through. Still, the company had to cut the issue size by about 30% midway. Even so, the curtailed book was subscribed only 92%. Having raised about 2,850 crore before expenses, there was enough for the promoters to clear outstanding dues for the newly listed Sterling and Wilson. But with the promoters now changing plans, investors are seemingly disappointed. Additionally, investors have discovered, much to their disappointment, that instead of a net decrease in outstanding loan, there has been a slight increase to about 2,085 crore. This amount increases to 2,341 crore after adding the interest. The promoter group has also requested for an extension for a revised repayment schedule to clear dues, adding that they will endeavour to reduce the loans outstanding by 750 crore by the end of this year. This doesn't cut much ice with investors. Experts point out that when a company deviates from its objects after raising money through an initial share sale, institutional investors will sell without bothering about the share price. Plus, investors bought shares in the company's solar business and want nothing to do with the sidelining business, leave alone lending to the promoter group. Among other things, Shapoorji Pallonji and Company is in the troubled real estate business where lending rates have gone through the roof. As such, investors are worried that the group is using Sterling and Wilson to borrow cheap. The sharp drop in the valuations of Sterling and Wilson Solar hurts the promoter group the most. For instance, the value of their stake in Sterling and Wilson was about 10,000 crore at the IPO price. The same has now dropped to 4,000 crore. As such, it makes sense for the promoter group to clear the air quickly and pay off the dues to Sterling and Wilson. That's all for today on the Mark to Market show. Stay tuned for more information on our website. Thank you.